Well, thank you for joining. I'm Maggie Kulyk, Chicory Wealth, and we're going to be having a guest speaker this morning with Alex Mackay. But I'm going to open just by talking just for a second about some macroeconomic things we're seeing. And I was going to kick off. I was going to go straight into Alex's presentation, but we have had a little bit of volatility in the last few days, and so it felt like it was appropriate to speak to that. So, yeah. So for those of you, I know for a fact that some of you on the call know the old adage, "Sell in May, go away." So it's been an interesting last few days. We've been sort of expecting volatility. Markets do not just go up, obviously. It's been interesting to watch some of the price action, if you will, in the market over the last few days. For those of you who pay attention, the center of gravity of conversation for the last 12 months had been COVID, of course. And what we've seen in the market has been kind of anticipation of the reopening. And I do think there is some reopening happening. Probably you're experiencing it in your own life. Just anecdotally, I'm experiencing it somewhat in mine. I'm now fully vaccinated, only officially as of today. Today's my 2 weeks after my second vaccination. And I was joking before we went on the call that I do feel a little like I've been released back into the wild. I ate at a little local restaurant on Tuesday night for the first time in well over a year that I've eaten out. I have not been eating out. We cook mostly at home. Most of you know that I live on Orcas Island, which is an island in the Pacific Northwest in the Puget Sound, north of Seattle. And up until about a month ago, we had the absolute lowest case count of any county in the country. And then we had a little outbreak at an adjacent island because I guess a baseball team had a sleepover or something like that. So it was kids and it spread a little bit, but it's been pretty light here. But I'll just speak for myself. Even with that, I've still remained cautious. I still wear a mask when I go into a grocery store. I don't wear a mask when I'm outside. My partner, who was also fully vaccinated, actually slightly ahead of me because she's a couple of years older than me, took the opportunity to get on a plane for the first time and go fly and see her 90-year-old mother. Her mom turned 90 on Monday, but was really quite hesitant about it and only did it because, her mother was turning 90. So, I just think it remains to be seen how much the hangover of the COVID reality, which continues to be a reality throughout the world, of course, continues to impact consumer behavior at the margins. But all that to say, a lot of what I think we've seen in the market in the last few weeks, there have been two themes. One is buy the rumor, sell the news. And the news is, what is actually happening macroeconomically now that we have begun to reopen. And I think that story is still playing out in terms of how things will really be impacted. The other is this concern over the year-over-year inflation numbers, which I think, I personally, I've been wrong, as I've said on this program many times. I think I've been wrong about inflation for like 14 years, so don't let me be your guide, but because I just kept waiting for it to come back and it never did. And now it has. And now I think, we'll see if it's real or if it's supply constraint. There seems to be, it's an open question as to what that is. The 10-year treasury, which is one of the benchmarks naturally we watch, is at 1.68%, which is still historically unbelievably, ridiculously low, but it is higher. Certainly that yield is higher, which is some indication that there's been some concern in the bond market. Although it's backed off, it hit like 175 basis points a couple months ago and has now retreated. Year to date, despite the sell-offs, the S&P is still up 10.2%. The Russell 2000, which is an index of small cap stocks, much of which is a play on the quote unquote reopening trade, is up about still 11.89% as of this morning. The NASDAQ, by contrast, is up only 3.19. That is a reflection of some of those companies which were very, very highly valued relative to their earnings being pressured by a higher 10-year treasury rate. And Bitcoin, right? Our favorite, great proxy for risk assets, perhaps, down 43% since its April high. Still up, however, significantly year to date. I think still up 12 or 15% year to date. But if Bitcoin does not appear to be at all contrarian vis-a-vis the market. It's tracked the market pretty, much more in a much more volatile way. It's like a 50 or 100% volatility. It's crazy volatility, but it's kind of interesting to watch that. So also, once a month, I track where is the Fed balance sheet. So I'm going to share that with you. Let me share my screen real quick and show you that. It continues to be extremely high. I think it's actually continues to rise. We're at $7.8 trillion in assets. So the Fed is continuing to buy treasuries, continue to pump money into the system. I'm just looking, I don't think it is backed off at all. I think this is from May 10th. I don't have this week's because we're always a week lag, but you can see this is where we opened when the COVID sell-off / crisis began. And this is where we are now. So it's just a parabolic rise. In terms of our core portfolio, we have just begun to have the technology to kind of track our core stock portfolio in a vacuum, meaning, as clients, you get performance reports that relate to your own personal portfolios, which with very few exceptions are not 100% stock. Of course, they have cash, they have treasuries, they have other things. Some of them might have Iroquois Valley Farm REIT, by the way, we'll talk about more. And they have inflows and outflows. But if you just look at the portfolio in a vacuum in terms of what we've owned and how we've changed it just in the last year, this is the chart on that. And again, we only have really good data that goes back about a year because of being able to track it this way. So our kind of core dividend and growth portfolio over the course of the last year is up about 44% compared to what we benchmark to, which is the MSCI All World, which is up 43.99. And then year to date, we're up just over 10. So remember, this is just the stocks, unmolested, no inflows, no outflows. So your own portfolio performance will look different because you're not 100% stock. But just to give you some sense of how our actual holdings are doing, I thought I would share this. So with that, that's where we're at. We're not making any radical changes at this point in the publicly traded portfolio. I will quit sharing and let me stop presenting and come back to our main screen and introduce you to Alex Mackay, who is the Vice President for Investor Relations for Iroquois Valley Farmland REIT. Iroquois is a non-publicly traded real estate investment trust that owns a diversified portfolio of organic farmland in 15 states around the country. Iroquois partners directly with independent organic farmers and offers them land access through lease and mortgage agreements. And some of our clients, myself included, I might add, actually already own some of this in our portfolio. We think that Iroquois really aligns very well with our environmental, social, and governance orientation. And certainly real estate investment trusts, even not non-publicly traded ones that invest in land, are a great diversifier. So for those of you who are not already invested in this, and if you are interested post conversation, please reach out. We can talk more about whether we think it's appropriate for you. But meanwhile, I'm going to turn it over to Alex. Thank you so much for being with us this morning, Alex. We look forward to hearing what you have to say. Go ahead.
Thanks, Maggie. Really excited to be here. Thanks to Maggie and Liz and Katie and everyone at Chicory Wealth for having us. We're excited about this relationship. Maggie and I started probably about a year ago now, although I think everyone has lost a sense of time. I am going to share my screen and see if I can walk you guys through a little bit of a deck here. Let's see. Give me a heads up if I'll keep moving forward with this. Can you guys see? Maggie, can you give me a confirmation?
Yeah, we're good. We can see your presentation. Go ahead.
Okay, great. Well, thanks for having me. Iroquois Valley is a real estate company, as Maggie was just talking about. So I think a lot of times when people are talking about impact investments, sustainable agriculture, sustainable food, a lot of sort of what you're actually investing in can get lost. And so just to start very clearly on what it is you're actually investing in when you buy Iroquois Valley stock, it's real estate. It's a portfolio of organic farms in 15 states around the country. I'm going to walk through the details of the presentation here today. But ultimately, you are gaining exposure to the farmland market ultimately. And farmland, and Maggie could certainly speak much more eloquently to this than I could. Farmland has been an asset class that investors have been gaining exposure to for honestly over a century. Institutions, pension funds, big pools of money really like to have some farmland exposure in their diversified portfolio because it does act as a hedge against inflation, something that is not correlated to the public equities market. There are all these opportunities to understand how farmland is basically something different than a traditional stock and bond portfolio. And so it can be a safety mechanism. It can go up when other things go down. And that's really what this company is. It's a play on farmland with a huge impact lens on the environment, the social impact of the food that we eat, and also creating a financial return along with those social impacts. So first thing I wanted to talk about today is the USDA organic standard. I'm sure everyone on this call has seen the USDA organic seal on the food at the grocery store, the co-op, oftentimes at the farmer's market. Farmers are advertising that they're certified organic. We're now kind of into this moment where regenerative ag is becoming the buzzword, and there's permaculture, there's biodynamic farming, there's all kinds of no-till farming, there's regenerative. So there's a lot to keep track of from a consumer and from an investor's point of view. And one thing to remember about organic is that is the only legally enforceable set of standards that has a national recognition and a board, a National Organic Standards Board that is a subsidiary of USDA. So if you really get into the law of organics, which obviously our firm does and our farmers certainly do, there are all of these amazing environmental benefits coming out of those standards. And I love this quote of what organic is. It's the cultural, biological, and mechanical practices that support the cycling of on-farm resources, promote ecological balance, and conserve biodiversity. So in a world that we're increasingly seeing needs to prioritize biodiversity, soil health, symbiotic relationship with the natural environment, there's a lot in the organic standard that does that. Everything from the soil health to the humane treatment of animals to what chemicals are not going into, and fertilizers are not going into the water supply. So for our company, which is a passive entity that is supporting independent farmers, it was really important to have some sort of standard that we could rely on to communicate to investors and to hold our farmers to account with. So we still remain very bullish on organic, even though there are certainly challenges that we can talk about. And that's how we are creating a baseline in the portfolio. Surprisingly enough, less than 1%, I think now, of the farmland in this country is certified. So there is, I would say that anyone who goes into a Whole Foods or even, you know, a Kroger or whatever your local market is, you know, the large chains, you think that organic has basically taken over a huge part of the market share. That's true. Organic food is now a $50+ billion industry. A lot of that food is not being grown in the United States. There's a tremendous amount of imported food from Europe and South America and elsewhere. And there is still a opportunity for there to be a huge increase in the amount of organic farmland that we have in this country. So that's what Iroquois Valley is doing, is supporting that transition. There's a lot of barriers to an individual farmer converting their land to organic. Organic farming is a completely different practice than traditional conventional farming. So there's certainly a skill set and a knowledge base that not every farmer has. But even if there is an organic farmer who wants to potentially transition or expand their organic farm, there are a lot of barriers there. And a lot of them boil down to money, of course. So organic farmers are not a huge candidate for traditional financing from either the, you know, public credit markets or private equity. And so, you know, that's what we're here to address at Iroquois Valley. One of the key moments that I'll talk about in depth in this presentation is this idea around long-term commitment. So when you transition a piece of land from conventional to organic, it's a 3-year process before you can get that certification. And that's not always the most cash flow friendly time. So getting traditional money, even from traditional ag banks, can be difficult. I'm just going to make sure that, okay, good. Everyone's here. I have a full screen view here. So I'm just making sure that everybody can see me.
Yep, we're with you.
Okay, good. I didn't want to be talking to myself. So yeah, holler at me if something goes wrong. So how do we address these problems at Iroquois Valley? So we are providing land access through leases and mortgages. So oftentimes a piece of farmland is extremely expensive. Farmers don't have a lot of cash on hand. Oftentimes farmers own their own land and then are looking to expand to another property that's adjacent to their current operation. We will come in and buy that land and lease it to them. We will work with them if they do have down payments to provide a mortgage that might be on more friendly or advantageous terms for the organic transition. Both our leases and our mortgages are structured with that 3-year organic transition in mind. So either the lease terms have a base lease and a variable rent component where the variable rent kicks in after the certification, or in the case of the mortgages, it's interest only for the first period and then kicks into an amortizing schedule after that, again, with the eye towards this idea that first handful of years are going to be more difficult financially as the farm transitions to organic. We have created this buy and hold strategy where shareholders, including the ones at Chicory Wealth, own the land for at least 5 years, and we are their share of the company for at least 5 years, and we're offering liquidity intermittently through a redemption program. So we're not a traditional fund that would buy land and then sell it. We're actually keeping it indefinitely. And that long-term ownership offers these farmers long-term plans where they're willing to invest in the opportunity, invest in the transition, and ultimately make a lot of decisions around, you know, long-term business profitability, but also long-term improvement of the ecosystem. And then our cash returns are directly linked to the performance of the farmers in many ways. And so we have farmers who are willing to share, we have investors that are willing to share risk with these farmers, so that when farmers don't have a good year, the cash return to investors might be lower, whereas if farmers have a banner year, the company should receive more returns. If you start to look into this space, there are other players that are doing similar stuff to Iroquois Valley, and that's great. We need 100 of these companies to address some of the challenges we have in sustainable ag. With that said, one of the really unique parts about Iroquois Valley is how we are doing one deal at a time. So we are not raising $50 or $100 million in a traditional fund, then deciding to allocate it over 18 months based on the idea that we like the upside of the value of these properties. Instead, every day, sometimes certainly every week, we have certified organic farmers coming to us because they learned about us at a conference, through a webinar, through our website, word of mouth with another farmer in our portfolio. And they're saying, I have an opportunity and I want to talk to you about potentially financing it. So oftentimes, like I said, they could be owning 100 acres and 100 acres across the street or down the road comes up for sale, and they want to expand their operation to have, you know, two continuous pieces of property together, use economy of scale, leverage their fixed costs, leverage their selling relationships, their storage. But that farm could be $1 million and they don't have the money to either put down for traditional financing, or really even that they would prefer to use that cash to expand other parts of the operation. So we deal with these farmers on an individual basis. We put them through an underwriting process that starts honestly with an email back and forth. Ultimately, they get given an initial intake form. If it looks like they're anywhere near someone that we might be able to, you know, partner with, we're having a phone call with them to have an initial interview. And then as the process goes, if it looks like it's a real live opportunity, we're putting them through a traditional underwriting process that includes credit reports, financial history, you know, looking at all their financial statements, 5-year business progression, getting an appraisal of the property, looking at the risks and opportunities in that specific market, you know, really kind of kicking the tires on the business, just like you would in any business that you're going to invest in. And we do a lot of focus on the person themselves. You know, are they the only farmer in their county that's certified organic so that they don't have a network that they can rely on? Are they from a farming family? Are the average sort of generational age of our farmer in the company right now is third generation. So most of our farmers are the sons and daughters of farmers, the grandsons and granddaughters of farmers. Their kids will probably farm. These are established farmers from established farming communities. We then are relatively agnostic to either a lease or a mortgage product, depending on what it is they want to do. Usually it's pretty clear from the farmer standpoint whether they want to own the land themselves and be paying us to, you know, the remainder of the balance through a mortgage, or whether they're looking to just get access to that property through a lease. You know, we're clearly understanding the opportunity on that piece of property for ecosystem improvement, for riparian buffer zones, for pollinator strips, for you know, potentially getting credits around water mitigation, bird habitat, conservation easements. And then again, we're partnering with that farmer for the long term. We're looking for long-term growth and profitability of the property. We're not looking at it in a 3 or a 5 year time horizon. So this is the entire company in one slide. So it's a great one to look at. But just really clearly, the system in general that I've been describing, and then we're going to dive into some specific farms, which I think is a little bit more exciting to learn about. We have investors on one side, on the left, at least my screen on the left, who are looking at you know, investing through two securities. We have an equity security and a debt security, and I'll get into the details. All of that money that's coming in fundraising, the company is using at its discretion to finance farmers in the pipeline. So we've built a list of farmers that are looking for financing. We're usually always in a situation where we have more farms that we can finance than money to spend, although our fundraising continues to improve, and that story is changing a little bit, which is great. We're either purchasing the land and leasing it to the farmer, or you know, taking out the existing owner and creating a mortgage for that farmer. And then the company's revenue is actually lease and mortgage payments. So we're not collecting a fee like a traditional fund. Every month, quarter, semi-annual period, we're receiving payments from the farmers, and that's the company's revenue. We are then paying all of our staff, all of our legal costs, all of our accounting with that revenue, just like a traditional business. We have a P&L statement that you can see with our audited financials, where our revenue is on top. It's then our costs, our debt service, and our profitability at the bottom, if there is any in that given year. And so those returns, those REIT returns, as a REIT, if you know anything about REITs, it's a real estate investment trust. You're required to distribute 90% of your net income out to shareholders in the form of a dividend every year. So in years where the company is profitable, that money is pushed out to shareholders as a dividends. The dividend has been small, but it's definitely improving, and we see a path to it getting much bigger. And I can talk about that at the latter part of this presentation. And then that entire system that we've installed is creating all of these positive impacts. So we're a public benefit corporation. We're a certified B Corp. Our existence as a company is around creating impact. So we're not just looking at it as let's own some farmland and do some good. We are looking at having a for-profit business that's DNA is about creating good with everything that it does. So let's dive into some farms. This is Harold Wilkin you see here in these three pictures. He was the first farmer that Iroquois Valley ever started with. Iroquois Valley is named after Iroquois County, Illinois, which is a couple hours south of Chicago. And when Dave Miller and Steve Rivar, the two founders who are still in charge of the company today, founded the company in 2007, they pooled about 7 people together to buy one piece of property to be converted to organic, and Harold was that farmer. Harold is now one of the largest diversified organic farmers in the state of Illinois. He farms land that he owns, he farms land that we own, he farms land that other landlords own. What's really cool about Harold is that he has vertically integrated himself. So he has built his own flour mill in South Central Illinois that is basically milling all of these organic and heirloom grains and selling them into the market. So he's on Whole Foods store shelves. He's selling into restaurants and bakeries in Chicago. You can direct order from Harold. His sales rate at the beginning of the pandemic, when everyone was running around making sourdough bread because that would be the way that you survived, his sales 1 week were up 2,000%, and he got featured on the BBC. It was kind of a cool story. I know he's still going gangbusters today. Harold is a great example of sort of when you take traditional Midwestern corn and soybean land and have a more broad and progressive understanding of what that land can do, start getting into multi-year rotations with many small grains, heirloom grains. He's selling to brewers and distillers as well. So this has been a really great story. And Harold's son Ross also farms land that we own as well. So this is kind of the classic Midwestern traditional organic row crop operation that we've been investing in. And it's really the bread and butter of what the company is doing. This is a new farm opportunity that's brand new, so I know a little bit less about, but this is a husband and wife couple in way up in Big Sky country, up on the High Line in Montana, up near the Canadian border, where they are going to have a rotation of grains and beans and also have grass-fed beef. So speaking of regenerative agriculture, which I'm sure many of you have seen in the paper or just as a buzzword as we continue to look at climate change solutions, really what regenerative ag is, I mean, it's many things and it's a complicated issue, but it's this idea of kind of, repopulating the natural ecosystem with what existed prior to cut and dry cookie cutter farming. So you have animals that are pasturing on the land, ultimately pooping and leaving their manure that's fertilizing the properties and the ecosystem, and then planting edible grains and vegetables and legumes behind that. And one of the things about ag that's pretty simple as an alternative to kind of the annual corn and soybean rotation, we're just planting the same thing over and over and over again and using fertilizers and pesticides to make those plants healthy enough to grow and not get eaten by pests, is rotation. The land likes to have one crop one year, followed by a different crop the year after, followed by a different crop the year after. We have some farmers actually also in Montana who are doing 7-year rotations. And what you're doing is you're naturally creating a healthy soil mix by having certain plants that do one thing followed by another, followed by another. Nitrogen fixing is an example that people are always talking about, that beans are nitrogen fixing. So instead of adding nitrogen fertilizer that's ultimately made by oil, you're adding a crop of planted beans that will add that fertility back to the soil. So you guys are brand new. They're definitely on sort of the cutting edge of regenerative farming. Great thing about places like Montana is that the land is cheap. And so you can do a lot of these, cheaper, I guess, land. You can do a lot of these sort of larger, less intensive practices because the pressure to create a cash return on an annual basis is less because your lease payments are less. And then this is another farm in Illinois. This is the closest to Chicago O'Hare. If anyone ever wants to go visit this farm, that gentleman in the dorky hat on the bottom left, we'll show you around. That's our founder and CEO, Dave Miller, and that's the other co-founder, Dr. Steve Rivard, behind him. What's cool about this farm is we are marrying a traditional rotational grain crop operation with agroforestry. So partnership with NRCS, which is a division of the USDA, and the Savannah Institute, which is a nonprofit that is basically looking at reprairieing the Midwest, planting the native tree species that existed there before all the trees were cut down for traditional farmland. We have this huge windbreak that's been planted with 10,000 native tree species. So there's a major highway coming straight south of Chicago that goes basically abuts this farm. And what we have going is this incredible windbreak of trees growing up as sort of an installation, showing people what can be done on this beautiful, fertile soil of the breadbasket of the country. So this is going to be great for timber at some point, small timber. It's going to be great for fruit and nuts, but it also offers all these soil health improvement opportunities. It attracts pollinators, it attracts birds. The reason that farmers have to use so many pesticides is because they don't have the beneficial predator species that used to exist in a balanced ecosystem where there would be one bug that eats the other and then a bird that eats that bug. So we're trying to, and succeeding in many ways, trying to recreate the natural ecosystem here in a farm that is also creating a cash crop of rotational organic grains. And this is going to be sort of a kind of a show me farm headquarters for Iroquois Valley moving forward, and there's been a lot of restoration work done with the foundation on the farm structures. So here's our portfolio today. 15 states. The company started in Chicago, has huge roots in Illinois and Indiana, so a large percentage of our portfolio was there. When the company started, you were really looking at doing deals one at a time with farmers that knew each other because there was such a tremendous amount of risk of starting out with just 1 or 2 or 5 farms. Farming is a tremendously risky business, and the way to mitigate that risk is to diversify within the portfolio. And in the beginning, the company used to count how many counties we were in instead of how many states. There is a tremendous amount of grains in this portfolio. These are a lot of farmers who are growing grains at scale with tractors in large scale farm environments and then selling to wholesalers. A lot of times you could find our certified organic food in, shelf-stable ingredients at the supermarket. But also increasingly our farmers are looking to sell direct to consumer through vertical integration like Harold's, as well as sell to more local food production facilities like brewers, distillers, bakeries, etc. I know we have a lot of Georgia folks and folks from the Southeast on the call. I know we should be in Georgia and South Carolina. We're not there yet. We're working on it, and we're making inroads there. I will say one great organization that I could give a shout out to is the Croatan Institute, Croatan. They're in Durham, North Carolina, and we are, we've been sort of we're a sponsor of theirs, but also a partner of theirs in ongoing work in the Southeast, specifically to basically help the economic development of rural areas in the South through organic ag. The thing about organic agriculture is if you're doing it right, it can be a lot more profitable than conventional. And so using sustainable, regenerative organic ag as a tool to do economic development has been something that we've been discussing with those folks. How am I doing on time? Pretty good. So we're almost done here, and then let's do some Q&A. I think most important on this slide is that upper left scatter plot. So that's every investment this company has ever done. And what I love about that picture is you can see this company has really been capitalized by a lot of investors supporting us with a relatively small amount of investment capital. And so that's really what we encourage people to consider, is this idea that farmland has been allocated in small amounts through many different portfolios, through the history of traditional and traditional portfolio management. And so thinking about this as a small investment, or a proportional investment, I should say, doesn't have to be small, to your portfolio, that allows you to have some diversification. And it's something you want to sit on. The way you make money on farmland is by owning it for a long period of time, collecting whatever cash rent or cash revenue, in this case a dividend, you can get off of it, and then selling it at the appreciated value, over hopefully a decade or more, because that's really the way that the returns are normalized. We've been growing it year by year, every year since 2007, and certainly our fundraising and our capacity to invest has started to get a little bit more exponential over the last few years. Farming is a slow growth industry, and farmland is the same thing. You have to make sure that you're not getting over your skis with buying farms that can offer you undue risk. So we've done a good job of incrementally growing this company over time. And although it's always hard to squeeze a lot of money out of farmland, and it's certainly in an impact company that's even more true, we've done a really good job of mitigating the downside risk and keeping the company afloat through what has been, especially the last 5 years until recently, a really hard period for farmers. In terms of impact, like I mentioned, it's really part of our DNA. We're a certified public benefit company, and our public benefit statement is enabling healthy food production, restoring soil, and improving water quality through the establishment of secure and sustainable farmland tenure. That's a lot, but I think it's really important to remember that the key to all of these environmental impacts that people are looking to have in their portfolio is long-term access to farmland in this specific case. So no farmer worth their salt is going to agree to lease a property for 5 years and convert it to organic, because right after they finally get the system in, they finally are turning the corner potentially on profitability. If the lease is done and the landlord decides they want to rent to somebody else or turn it into a housing development or do whatever else they want to do, there's really no motivation for the farmer to invest in that piece of land. So we really talk about this farmland tenure, long-term access, as the key to what we're doing. As I said, organic certification is kind of the baseline. We have a lot of farms in the portfolio who have certifications above and beyond that. And we love when they do that. And there's certainly a lot of information on our website about the specific opportunities. If any of you have heard about Impact Assets, it's a group that is a donor advised fund, but it also has an annual listing of the best 50 impact companies in the world. And we've now had, I think it's 7 years in a row of being part of the IA 50. And so we're now called an emeritus manager. I didn't know you could we already had emeritus people in impact investing, but apparently we're one of them. So that's great. And we are consistently rated as a best for the world company by the certified B Corp folks as well. And that might be a little sign you see at businesses around your community. So there's 2 ways to invest, and Maggie, of course, would be the person to talk to what's best for you and answer specific questions. But ultimately, just very broadly, you can either buy stock in the company. That's about 70% of the capital you raise. Those are called REIT equity shares. You own a tiny slice of the entire portfolio, and your returns are annual dividends in times where we've been profitable, and also the appreciation of the land over time. So you buy in at one stock price, and then every year our company does a revaluation of the shares. We just did one. It went from $595 a share to $118 a share. And that share price is reflective of third-party appraisals of the farmland in our portfolio, with a couple of premiums added in for organic certification and company intangibles. I think that the shift we just saw from $595 to $618, right around 4%, a little less, it's a great indication of the sort of appreciation of farmland you should expect in a normal year. You can look at graphs of farmland over a 100-year period, and it's actually a very safe, stable investment over that time and in decade chunks. If you look at it year to year, it can fluctuate, it can go down, it can be stagnant. We've just been in a period of relative sort of flat performance of the stock price. So this is really something that you're looking to not trade. We have a lot of retirement money. We have a lot of money that people, I think, are sort of not forgetting about, but are just setting and forgetting. So it's around, again, allocating money that you would like to have appreciated over that time, but that you're going to not need access to for at least 5 years. And then the other product is a note product where you're buying a note from us. You're only lending money to the company. And right now you're getting a 2.25% annual return on that money. What's really cool about the soil restoration notes is the company is actually paying out 2.25% to the investor, but another 0.5% is being paid by the company into a pool called the soil restoration pool, where we are giving cash grants to farmers in the portfolio for specific projects that are helping with the soil health on their farm. So that could be building a fence in order to have their animals be able to pasture, in order to create natural fertility and not have to buy manure from off-site. It could be around cover cropping. It could be a piece of equipment. It could be repairing a stream bank. It's a relatively small pool of money. It's around $50,000 a year right now, because we have around $20 million of these notes outstanding, a little less. But ultimately, it is a direct impact to farmers that they really appreciate. So I am going to stop sharing there. I know that was a ton of information, and I appreciate you guys all listening so diligently. Or if you weren't, I couldn't see you, so it doesn't matter. But I would love to hear questions if there are any, and happy to make it more conversational, or we can go off the chat, or Maggie, you can ask questions.
Sure. Well, I'll give anybody an opportunity. If you do have a specific question, just pop it into the chat. I will say, Alex, it's I've talked to you a few times. This is the first time I've seen the full presentation in over a year. I think you're right. We've been working together now a little over a year, and every time I get your updates in my inbox, I'm increasingly inspired by what you guys are doing, and I do think your model is quite unique, especially when we look at it against some other farmland real estate investment trusts we've looked at or evaluated that are not as farmer centric, I guess, for lack of a better word. And so I very much appreciate the model and the enormous impact it's having and the potential impact. There's particularly, I mean, I'm struck by not just providing organic food for us humans, but the impact on the soil and the direction we need to head in terms of carbon sequestration and the potentiality of some of that. So it's a great thing. The other thing I appreciate, and this is for those of you who are listening, is that a lot of, and some of you already know this because we've talked one-on-one about this, a lot of true impact investment, and how do I define an impact investment? It's an investment that really centers the impact of the social impact and the social returns of what the investment is doing, but that also has a reasonable level of return and a high likelihood of the money returning to you, which is very important. Most of those types of investments have, the ones I've seen as we've done research for clients, have very, very high minimums. They're mostly the purview of institutions. So sometimes the minimum is like $250,000 or $500,000, which means that it's relegated to either foundations, institutions, or very, very high net worth individuals. And what's great from the standpoint of Iroquois for us at Chicory is this is an investment that really meets all the mandates and has solid financial returns and true impact, and yet is available on our TD platform, which means it's very easy for us to, do the paperwork, et cetera, and get you in it and put it even in your IRA, which is can be a big, hairy deal with some non-traded impact investments. At a really, on the equity side, particularly, a very reasonable minimum, just a hair over $10,000. So we do have a question, and it was a question I was going to raise as well, Simon. Do you have any farmers of color And if not, how are you trying to approach that?
Yeah, it's a great question. So we have 3 farmers in the portfolio identify as people of color. That's small. We have over 50 relationships with different farmers. And we have been, I mean, it wasn't just recently, although I would say that recent events and, how we're all looking internally at doing more around social justice and racial and DEI and racial diversity and inclusion, we have kind of poured fertilizer on that plant and started to prioritize relationships more. One of the coolest relationships we have right now is with a nonprofit called the Black Oak Center, which is based in Illinois, which is a whole story unto itself around historic, basically a bunch of Black farmers who were given the worst and most unfertile land after a system was built around keeping the water out of that situation. And so we have partnered with them to actually grow vegetables at Rock Creek at that project as sort of a pilot project between us. And we're in a grant with them that would actually improve our ability to underwrite farmers of color by understanding more of the lens with which we need to approach farmers of color, and then sort of the underwriting questions that we need to ask and how we need to look at the situation. That many traditionally have said maybe that they are uncreditworthy, but rather that was like a lens with which you were looking at the situation. So we're doing great improvement there. And then in general, we've established a DEI roadmap as a company. There's an amazing organization, if anyone is ever interested, called Soulfire Farm, which is doing massive training and education for organizations all around the country around basically the history of Black farmers in this country, which is not a pretty one. And so that was kind of our kickoff event of this entire roadmap we've installed as a company to make more inclusive opportunities for people of color with our financial products. So it's a work in progress, I would say, but it's better than it's ever been.
Alex, I'm just curious, and I've got another question here, but before we move to that, Black Oaks and Soulfire, where are they actually located?
Soulfire is in upstate New York, but Leah, who's the executive director there, wrote a book called Farming While Black, which is also an awesome, just if you're interested in this stuff, a book to read. And they kind of have a national network now of people, now that we're all Zooming, doing work with them. And then the Black Oak Center is outside Chicago, and is just remember too, one of the things they're doing on Rock Creek is they're planting vegetables for seeds for a seed basically operation, selling seeds, organic vegetable seeds into the market. So definitely Google both those organizations and check them out. I see that Howard is asking about farms in the network. So just go back to what this deck says. We're right around 100 different investments. And oftentimes we're investing with the same farmer multiple times, because if they're a good performer and there's adjacent land or other opportunities that come up, it's an efficient way for us to invest in something that has proven to be credit worthy. So we have more like 60 different relationships with those 100 different investments. And in terms of moving forward this year, we do have, a pipeline of opportunities that are similar in nature to kind of what we have now. So I would say that we continue to nip away at that dominance of Midwestern traditional row crop. But, it's a tight line to walk because we're really good at buying that land. We know all the questions to ask. We know that industry well. We know that market really relatively well. We have this awesome network of farmers who could assist a new farmer in potentially transitioning or problem spots. We're also looking to diversify because you want to have different crops, different regional diversification, different weather patterns. We had a really tough year in 2019 because it was historically wet in the upper Midwest, and all of our grain farmers planted extremely late, and we had a lot of exposure to them. And so we had a tough financial year because all of them were planting 6 weeks later than they normally did. They had low harvests, they had bad revenues. So it's this fine line to walk between making sure we're supporting farmers that we thought about, that we can efficiently invest capital with, while also diversifying into new places and new crops. So Lori, I'm curious as to how you or the farmers you support might work with organizations like the American Farmland Trust, Eco Farm, etc. Also, are there organizations like yours in California? Do you have investments in California? So I'll answer the second part first. One organization similar to ours in some ways is called Farmland LP. Like Maggie said, they're more of a traditional fund structure, but they are also doing really good work. Higher minimum investment, I know, and it's accredited investors only. With that said, their model is different in that they're actually buying the land and then managing it, harvesting the fruits and vegetables and food themselves, putting it into storage themselves, and then selling it into the market themselves. So they're also doing a lot of great natural environment improvement, and I support them in terms of sort of all that we need in this country. But just from a business model perspective, they're much less likely to partner with an individual farmer and much more likely to have like sort of a corporate ownership of a piece of land at scale that they're taking from conventional to organic and then selling at an appreciated price 10 years down the road, which is another way to do this. Another organization in California that you might want to look up is called California Farmland. They're a nonprofit, but do loans to individual farmers. They've actually become a secured lender, which means they have a lot of government backing. So they're able to either partner with government-backed loans or offer low interest rates to farmers. They also offer farmer services around how to find land. We're not in California. California is obviously grows a tremendous amount of food for this country. I would say it's probably our most important agricultural state, although others might argue that they are. And it's expensive, and there's a lot of water issues there. So I would say, like, are there opportunities for us to get involved in California? Yes. Have we been aggressive there? No. And I think it's more indicative of not any secret, but just that we don't know a lot about California the way we do about Illinois and Indiana, Minnesota, Wisconsin, New York, and even now Washington State. And so it's just less likely for us to get aggressive there, because when you're looking at deals, they are, potentially high risk for a variety of reasons. Colorado, very similar. We've gotten Cindy just asked a great question about, are we in Colorado? We have farmers who have approached us in Colorado. We've done pretty good dancing with them, gone pretty far. And ultimately, land, especially, in the areas where population is exploding, it's very expensive in Colorado. Also, additionally, there's water access issues there. And, it's not just will Iroquois Valley do the deal, it's, if you look at the kind of just the simple math, if this land is so expensive, there's really not anything you could grow on it and sell for food that could repay the debt, whether it's us, whether it's a traditional lender. So there has to be a conservation easement, or there has to be some way to mitigate that math problem. And, we saw that outside Boulder, which of course is one of the most expensive places. So we have a lot of friends in Colorado, and that brings up another organization that does similar stuff to us, which is called MAD Agriculture, like MAD, like Mad Science. And they have a fund called the Perennial Fund, smaller, newer, and they're doing work with independent organic farmers as well. They're doing mortgages and lines of credit. They're based in Colorado. I love their founder, Phil Taylor, and their other principal, Brandon Welch. Great people, and they would know about Colorado specifically, so that would be a good resource for you. But if a farmer is interested, they're welcome to reach out, and certainly it doesn't matter if you're an investor or not. If you were to, reach out to us and say, I've got a farmer who I think could be a great fit for you, it's really important for everyone to know, not that you don't, but just to kind of like solidify this thing, is that we'll never buy a piece of land without a farmer that we know is going to farm it. We're not farmers. So, we see as land without a farmer is basically an asset that isn't creating revenue. And so everything we do, it sounds hokey, but starts with the farmer. Not only do we prioritize the farmer's well-being, we literally need to know who's going to farm the land before we start considering buying it. And so that's kind of a fundamental difference between us and some of these other opportunities. better or worse, I'm not really sure. Or this isn't the time to say. It's just really key to our model is people say, oh, I want to sell this land. You guys are great. Do you want to buy it? And our first question is, who's the farmer? I know we're coming up on the hour, but I'm happy to stay on if people have other questions, or can leave it there. I'll defer to you, Maggie. It's your show.
Yeah, thank you, Alex. Well, I really appreciate this. It's been great. I'll give a last call if there are no other questions. Going once, going twice. Thank you for the very good questions. So, folks, you know, if you are interested in learning more and asking the question whether or not this investment fits in your portfolio, obviously reach out to us at Chicory Wealth, and we're happy to talk one-on-one with you about this. But I just want to say again, thank you for taking the time, Alex. It's great. You're doing great work. Very aligned with what we're trying to do here at Chicory Wealth. And just want to say thank you. Thank you very much. And thank you for all of you who joined. Enjoy the rest of your day, and we will see you again in a month, if not before. All right. Thanks, Alex.
Thanks for having me. Really appreciate it.
Okay.
Thanks, everyone. Talk to you later.
Bye-bye.